Welcome to the Branding Laboratory, where we explore the art and science of branding. I'm your host, Deevo, Tindall, brand strategist, storyteller, and master photographer. Join us as we dive deep into the captivating stories, expert insights, and practical tips to help you elevate your brand and connect deeply with your audience. Let's get started. All right. Welcome to the Branding Laboratory. I am your host, Deevo. I'm glad to be here today. Today, I have a fascinating individual lined up who has over 40 years of experience in the investment management industry. And we don't normally have financial people on here, so it's something that I'm really excited to dive into with him and listen to his wealth of knowledge on business growth and what he's doing to perpetuate and build his personal brand around that, and really learning his story and his lessons and the trajectory that he's taken and how did he get to where he is today. His name is Steve Selengut. Still, am I saying your last name, Steve Selengut?
Yep, you're there.
Damn.
That's good.
He's the co-founder and CEO of the incomecoach.net. Again, that's the incomecoach.net. He's a seasoned investment advisor. He's been doing this for a long time. So hopefully we can steal some secrets on that, especially in this volatile period we're stepping into, which I'd love to get your insights on that, Steve. And he's the author of Retirement Money Secrets. So if you're looking for a cool book to read, you can see it there in the backdrop of your video, Retirement Money Secrets. Steve, welcome to the podcast, man.
Thanks for having me. It's good to be here.
My pleasure. So Steve is in Charleston, South Carolina. And just for anybody listening, if we do get cut off, he's in the middle of a hurricane right now. So if the powers that be don't want us to talk, we'll have to reschedule and get the rest of this story worked out. But Steve, I love to always learn in every situation people's origin story. It really fascinates me how people's journeys and their trajectories are so varied and so different. And one of the things I've struggled in my brief life, and I was talking about this morning in a keynote, is we have this idea that life is this linear straight line. We're going to go to school, go to college, get a job, work there. But it isn't, man. It's a squiggly line and it goes all over the place and zigs and zags. Tell me a little bit about your experience and how you got to this point in your life right now.
It's, I guess, to get where I am today and all that, it started after college. And I didn't go to an Ivy League college. I went to a small school in Pennsylvania called Gettysburg. I'm sure you've heard that name.
Mm-hmm.
And I did that mainly because I was not very well directed as a youth. When I got out of high school, I didn't have any clue what I wanted to be. I was thinking of sports. I was thinking of having fun. So I went to a school that had a strong fraternity system and a good wrestling team and started it out there. And when I got out, I hadn't changed much. I chose my parents, you might say, and I pretty much had everything done for me. I didn't have any debt. I didn't have any problems. I was pretty much on my own. And I never felt like I really had accomplished much. I didn't get a great job. I was working in Manhattan. I had saved money as a kid, and my father and his lawyer had invested it for me. I really didn't even know how much there was. But I never lacked for anything, but I never really was motivated to do anything special or have the opportunity. So all of a sudden, when I was 25, my dad drops this envelope full of securities on my desk, my table, whatever it was. And inside I found all these stock certificates, actual certificates that we don't see anything of anymore.
Yeah.
But they were perhaps 40 or 50 different companies that I owned shares in. All of them paid dividends. All of them were well-known companies. There wasn't one, and being a 25-year-old, you don't really have your thumb on everything that's going on Wall Street by any means at all. But I recognized the name of every company that I had shares of that were in my portfolio. And the interesting thing about them, and something that my father drubbed into me, was that every one of them paid a dividend. And he told me, no matter what you do with this, it's yours now, buddy, but you got to take care of it. Always demand that you get paid for any money that you invest with anyone, just like he had with his real estate. He had a multi-level real estate company. He said, focus on the income and everything else take care of itself. And that's pretty much how I struck out. not struck out as in
Mm.
baseball, but struck out on my
Yeah.
way. So all of a sudden I had this big responsibility, more responsibility than I had in my job. I was there, I was in the pension investment department. I saw a lot of stuff about investing and I started to put the two together and I started to take those stocks, understand the cycles that they went through, the ups and downs, and say, I can take advantage of this volatility.
Mm.
I can take a I can make this volatility something that will make me a lot of money because with these companies, they keep raising their dividends, their prices go up and down. It doesn't seem to matter. Everybody gets excited about it, but in the long run, it doesn't matter. So I started trading them. I started setting targets for my profit taking. I started reinvesting the dividends. I started finding more companies. Whoops.
I'm still here. I don't know what's
Okay.
going on, but I'm still here.
Okay. I started finding more companies that paid dividends like that and trading them. And after 5 years or 7 years or so, I was making five five times my salary in New York by trading stocks and clipping coupons and getting the dividends and investing in corporate debt and preferred stocks and stuff like that. Five times.
Wow.
So I said to myself, or my wife said to me, she said, "You're really not going anywhere with this company because you don't, you don't cater to your superiors like most of your fellow employees do, and you argue with them, and I hear about what you say, and you're not happy there." And so I said, "Okay, I'm gonna leave that, and I know at least two people that I can teach this to and show these people what I've done, and get them to let me do it for them." And I did that. They agreed. So I went out and I got it wasn't a Series 7 like a broker. It was you had to take different exams to be an RIA, a registered investment advisor. So I did that and I started doing this for people. And I started doing it. And eventually I got more and more clients. And I got more and more clients because these people would tell their friends. My portfolio was making 4% or less than 4% income. And since Steve took over, I'm making 8, 9, 10% income and we're reinvesting it and everything's growing and I'm not losing money on anything. There's nothing to take losses on and so on. And all of a sudden, I was making a substantial amount of money. And eventually I had 135 clients and some of them outside the US, all over. I was managing $110 million for people and it was all focused and the focus of it was different. I wasn't just trying to buy stocks that would go up in price and say, hey, look how high your portfolio value is. I was trying to make their money, their income that they earn, grow every quarter, every year, and the capital that they have invested, making it grow too, because it's the capital you have invested as opposed to the market value of that capital
Mm. Yeah.
that generates the income. And that's what I had when I sold the place in a year ago or so.
When you look back at so when was the last time you were doing that? When did you sell the business? In May. Oh, so you're brand
Of
new to
no,
selling.
May of 2023. So I'm retired now for 13 months or so.
So when you look at May in 2023, going back to the number of years when you first started doing this, has your philosophy around trading, your philosophy around business, have you seen an evolution in that? And so what ways?
In several ways. One of the ways started when I really the Great Recession they called it,
Mm.
and it wasn't
Wait,
the Great
wait, there were
Res.
two in my lifetime. So 2008 or the one before that?
Well, 2008 was what they called the Great Recession. The dot-com bubble was the one before.
Got
That
it.
was right at the turn of the century.
Hmm.
And the one you don't remember is the 87 one, the crash of 87,
Yeah, I would not be part of
which was
that one.
pretty much a computer glitch. But what happened then, which was so much different, and through us, myself and the people that I traded through for the loop, after 2008, you remember, if you remember back that far, interest rates, when you bought your first house, interest rates,
Hmm.
5, 6, 7%,
Hmm.
mortgage rates were that high.
Hmm.
My whole existence up to the financial crisis, I had never experienced interest rates below 5% in my
Wow.
life. So all of a sudden, you get this financial crisis, and they bring us out of the financial crisis by moving interest rates down to near zero, down to near zero. All of a sudden, retired people savings accounts were paying nothing. Scared them into the stock market. Oh,
Let me pause you there for a minute. For those people who don't understand the interest rate and why they went from 5% down to zero, what's the logic behind the government doing that?
to bring the economy back.
I know, but in terms of the trigger for that, what were they hoping? Like by lowering, and again, just assume that nobody knows anything about this.
I,
What were they hoping to do? How does that financial model actually work?
what it does, it makes it cheaper for corporations and business people to borrow money so that they can start businesses.
And not have so much to pay back over the
Right. And
life of their
also
loan.
individuals who buy homes, they can buy homes because now they can afford the mortgage
Mhm.
payments and so on. The only thing that's the only irony of it all is that somehow or other they never managed to get credit card debt to go down.
Mhm.
Credit card debt in that very same period of time went from a standard of 10 to 12 maximum to twice that today. There used to be usury laws that used to take care. But anyway, so what happened at that same time though, because all this money was going into the stock market and all these yields were going lower and lower, I used to buy stocks when they were down 20% from their 52-week highs, which
Mhm.
means they were lower, and I got that chance to buy them lower and sell them higher.
Mhm.
They built the market up so much with these low interest rates and the economy going crazy and stuff, and all these people who couldn't you, who wants to have money in a savings account at zero or buy a
Yeah.
bond that's paying 2%? The stock market was the place to be. So everybody was going there. Good companies were not going down in price. They get more and more expensive. You saw the stock market just going up and up. There was nothing I could buy. If it was going down, the reason was not because everything was going down and it was an opportunity. The reason was, must be something wrong with that guy. I'm not buying him.
Mhm.
So that's when I discovered closed-end funds. That's when I discovered this other method of taking advantage of the growth of the stock market at a lower price and with a much higher income return on them. So that was a big change in my methodology. I had been using income closed-end funds before that for bonds, municipal securities, preferred stocks, mortgage investments, and stuff like that. I had discovered them earlier, much earlier than I really needed to with stocks. And finally, I went to the stock market. Now I don't own an individual security.
Hmm.
I find them much more risky.
Can we look a little bit at the evolution of your business model, if we can, for a second? So, and what was the number of years from when you first got the stocks from your father till 2020? When did that all begin? I'm sorry, I missed that year in college, you said,
I got it. I started the business in 79.
in 79.
I sold it in 23, so it's 44 years.
So, in the 44 years of doing business, and I want to go back to something else you said. Your wife had chided you that you don't cater to authority. You're probably not cut out for this mold. I find that is one of the benchmarks of most entrepreneurs is they get into this space where they want to have the autonomy and the freedom. Kudos to your wife and for you for recognizing that, because I know a lot of people have those feelings, but they just suppress them and end up staying there for the rest of their life doing something they
Right,
just
right.
absolutely abhor. But in those 40 plus years of running your business, in terms of building up your clientele and your book of business, did you have any key strategies that you, if you reflect back on whether it was relationship building, the quality investment portfolio that you built, were there any sort of high benchmarks when looking back that you can say these were some of the critical elements that helped me build this book of business for 40 plus years?
It was the focus on the income and making the people understand and telling them up front, hey, you are so much in the stock market, and that stock market's going to go up and down. So ride with it with me because the companies we own have never been, it's never been a problem for them.
Mhm.
They've always made it through any downturns in the market. They're rated this level, B plus or better, by Standard and Poor's for a reason. And the
Mhm.
reason is that they have all their fundamentals are good. They're not speculative entities. They're not new companies. They're the old stalwarts of the economy. And I think people felt comfortable with that.
Mm-hmm.
When the dot-com bubble burst, you know, I got fired by maybe three or four, maybe even five clients who wanted me to get into what they were calling at the time, the press was calling the no value rally. And I said, sorry, man, I'm not going to do that. I'm just not going to go there. If you want to go there, find somebody else. And they did. And that didn't bother me. It bothered me that I couldn't convince them that it wasn't going to be in the long term. They're going to hang on to these things and not take their profits, and they're going to lose money like most people
Mm-hmm.
did when they get speculative.
Mm-hmm.
So the thing that got me through all of this, and I didn't get any phone calls after the dot-com bubble burst. I didn't get any phone calls during the financial crisis because I had people so much accepting the concept of the quality, the diversification, the income production that they had going for them, that it was going to continue regardless of what the market did. So
There are two things I want to unpack in what I just heard you say, and pertains for the branding and the marketing side of things. Again, this is a branding show, so I want to pull those
right,
things back. Your brand message was, and it sounds like it was consistent through the algorithm of your business and your career, was ride the storm, invest in the process. We're not just going to jump ship when things go hairy. And so because of that message and the consistency of that message, you were able to not only build a qualitative track record based on that, but you were also able to show your ideal investor, the person who was really on board with that protocol and that process, which is your second piece, your ideal avatar. So, how important is it? And this is a question: how important is it in building a business? And you've got 40 plus years experience and knowledge around this, whether you're an investor or you're selling an e-commerce store. How important would you say it is for an entrepreneur to be very clear on their message to their ideal audience so that they understand who you are, what you stand for, and your personal philosophies around running this business, that you're asking people to give you money to do something for them?
right. Yeah, particularly since what you just said last, I'm going to be taking your money and investing it for you. And the thing I told people from the very beginning was that I will never ever put you in any security that I don't own myself, that I
Well,
don't own myself.
talk the talk.
And I stuck with that. I said, if the market goes down, my portfolio is going down too, and I'm not worried about it. You don't have to be worried. Like I said, I never got any phone calls
Mm-hmm.
when the markets went down.
And you mentioned earlier a second ago that you also had a few people that during the dot-com bubble that fired you because they wanted you to take a different approach,
Right,
get off of your core philosophies, and you refused to. And one of the things that I really want to call out and what impressed me about that is that a lot of times people try to market their services to literally everybody and take it personal when someone doesn't line up with that, and try to shift so that they can either absorb that loss or be more adaptive to them. But if your product is based upon a core philosophy and you have a core value around something, it's really important to stick to that, isn't
right.
it?
And that's the way the financial services industry is not set up. They will buy anything you want. If you go into somebody, if you call your broker and say, "Hey, I want to buy some crypto,"
Mm.
they're going to do it for you. For financial planners in general, if you want an annuity, they're going to do it for you. But for me, if it wasn't on my list, if it wasn't something I was doing for myself, I wasn't going to do it for you. I had a situation when we sold the business. We sold the business, and after I started my coaching business, I discovered that people who in that era where I said I wouldn't do it were still with the firm that I had, and I didn't even realize it. They had
Wow.
stayed there, just the other brokerage partner took over the client from me, and I
When
didn't even
you
realize it.
sold the company, were you apprehensive? I'm assuming you would be. This is your baby. But did you were you very careful and scrutinous on who took over this book of business for you, knowing that these were people that had invested 40 years or some sort of nature of something of that nature
I
in you?
I had I had mentored this young woman
Mm-hmm.
who became the broker over the years, over the last 5, 7 years. She had been managing a part of my portfolio with client's permission to get her trained because I was getting old. They all knew I was getting old, so it wasn't going to last forever.
So someone you
So
had vetted.
yeah, so I had vetted somebody, and when we were making the arrangements to sell the business, I was confident that she could handle it, assuming she, because I had her and I had her employee or two to do all the legwork necessary to run my operation. It's a very high transaction
Mm-hmm.
operation. I'd spend 2 hours on the phone with her placing orders
Mm-hmm.
almost every day. That's how big of a deal it was as far as time consumption, because it was all individual and different portfolios. We weren't pushing a button and selling this for everybody.
Mm-hmm.
We were selling John's because it was a profit. We were buying more of the same stock for somebody else because they had bought it at a higher level and now it was a bargain to buy more. Really, literally, those things, types of things could happen just as they do in the real world market, right? Some people are buying, some people are selling.
I want to
So,
switch gears and jump into your
sure.
coaching business now, if you don't mind. Interestingly enough, I sold my first business back in 2014, and I did not sell to someone I had vetted. I sold it to one of my biggest competitors at the time.
Oh,
And it was a decision it was a very conscientious decision that I made because I had done all I could do in that business and I was ready to move on. And so I decided that I wanted the company to continue in that sense. It was a different decision process than
yeah.
you had. You're now in coaching and you're helping other investors. Is this how I understand it? If you can give me a highlight on that, you're helping other investors like me or people who were in line with your business model before learn how to do this by themselves.
Right.
Or so talk to me a little bit about that transition and what that's been like for you in the last
Yes.
year or
For
so.
the most part, most of the people who come to me now have read the book or heard about me on a podcast or something like that, read
Mm-hmm.
something I've written and want me to take a look at their portfolio and get them in a direction of income independence. That's what we're selling. Income independence. You will have enough money to take care of the bills regardless of which way the market goes or interest rates. The income is going to be there, not to worry. So that's what I'm trying to bring people to. And coaching and doing that and looking at the portfolios and analyzing them, I'm learning a lot about what the normal portfolio looks like when it's not done for an income focus.
Mm-hmm.
But most people are very receptive to the change and instantly see the results. Their first statement will be twice the income as the statement before they switched, and they'll see that much more income coming in. That always makes people happy.
Yeah, I bet. Who's going to say no to that? So this new business is called the Income Coach. And
Yeah.
tell me a little bit about how you're marketing this company. So are you using social media? You have a website, but what are you doing to garner new leads and new audience to really hone in on who that ideal buyer of yours is?
Talking to you, and
Podcasting.
and I think that's been very effective.
Mm-hmm.
And I repost the podcast all over Facebook and LinkedIn and stuff like that. It's still tough to get that message out there, to get people comfortable with not the first place I look at when I get my statement every month is how much income I made.
Mm-hmm.
The first thing most people go to look at is what's their market value.
Mm-hmm.
And I getting them to change the mindset from the market value focus to the income focus is really difficult. And to get influencers, people like yourself, I have one, maybe two professionals who have said, yeah, I want to bring my clients this kind of income. Teach me. I've got one who's on retainer now, and I'm teaching him. And if and when a coaching client asks me for a referral, that's who I send it to.
Mm-hmm.
I have another guy who hasn't made up his mind yet if he's going to go get the license to become the broker in order to do this.
Mm-hmm.
But I get so frustrated when like you have LinkedIn has these groups just like Facebook does, but
Yeah.
LinkedIn is more of a business operation. And its groups say, you look at the name of the group and it's financial services people, investment advisors. And I'll place almost like an ad there and say, hey, I want to show you how to double or triple the amount of income your clients are receiving. Would you like to talk to me? And they just don't care.
Yeah, LinkedIn is a funny animal. We can talk about that till I'm blue in the face. The problem that I'm seeing in the marketplace now in terms of selling in a one-to-one capacity on a very highly qualified product like you have, which is a very individualized, tailored approach, right? Is that everybody is trying to sell something now and everybody's using social media to do it. And so buyers are very wary of
Yeah.
constantly being sold to, right? It's when the old school days come in, the telemarketers ringing your telephone at dinner time or people knocking on your door. And so we've become fight or flight in that response. Oh my God, someone else is just sending me.
Another one, another one.
Yeah. So
Yeah.
it's, yeah, one of the things that I have seen in working with my clients is how can you take your unique value proposition? Again, what is it you're doing that's uniquely different from other investors or other people who are selling something in the investment space? And how can you craft that message so that it directly speaks to your ideal buyer? And then the process of doing that, they catch on to what it is you're trying to offer without necessarily selling them. So have you taken, and this is just a softball question, have you taken a look at what you do as an investor, and I'm just going to use that term as a benign term, what you do as an investor and the problem that you're solving for your ideal client. Have you taken a look at that and can clearly articulate that in a matter of seconds to what that looks like for someone like me who's not necessarily as well versed in this space as you?
If I can have a discussion with them of what income independence would mean to them, yeah. But people read income independence and they might hear financial independence, which everybody is talking about. And that could be any pie in the sky thing to, to get you you're going to make a gazillion dollars on this Bitcoin operation and you'll be financially independent. But will you be income independent? And they're two different things and they sound so much alike.
Mm-hmm.
And I think there's a difficulty there. But if I can sit down face to face and talk to somebody or show them the income generated by my portfolio and say, this could be your portfolio, I can take them right to my account at Fidelity and say, here, this is what they tell me my projected income is. And this is the amount of the portfolio. I can get you there. I can get you there. If I can do that, most of them will say, okay, take me on the ride. But the other guys, the LinkedIn guys, will say, will write back and call me a sale. What's that? They think you should call a something salesman. You know what I mean? Where you're selling something on the
Like a used car salesman?
like a used car salesman, something like
Yeah.
that. Yeah, really sure. No, you can't make 8%. You can't make 9%. You can't make 10%. When that's right there in black and
Mm-hmm.
white, they think I'm making it up. So
Yeah.
that's the attitude of the professionals. So I'm better off. I have an easier time talking to an individual person one on one and getting him converted. I almost never have the opportunity to talk to his financial advisor.
I'd love to take this conversation offline with you if you're up to it. I have some ideas on how you can clarify that message so that it has a bigger resonant factor with your audience, especially in a one-to-one capacity. So if you're interested, that we can take this conversation offline. I do want to switch gears because there's a couple of things I want to get your advice. You've been doing this for so long as an entrepreneur of 40 years and looking back and unpacking all of that. We talked about the squiggly line, looking back at all of the different lessons that you learned. And I hate to call them failures or mistakes because they're never failures or mistakes to me. They're always an opportunity to learn something. So in all of those lessons that you've learned, what advice would you have for, you can just use this in your current business model? I'm now one of your students in your new coaching business. What advice would you have for me as I'm starting to take on you as my mentor, for example? Would you have for me in investing and running my business and just being this young entrepreneur that hasn't seen the type of experience model that you've seen? What are some things that you would be able to pass on?
I think that most successful business people, young entrepreneurs and people like that tend to use their newfound wealth in the form of the salary, what they're making this year, that year-end bonus they get, and they buy things. They buy trinkets, they buy automobiles, they build a swimming pool. They don't think about, I want to get to the point where my investment portfolio is generating more money than my employment income, which is what I did. That's what I shot for, and that's what I did when I got out of the business world and into my own business. I think if I talk to people and they're at that stage where they're really successful, geez, I'd like to take this idea and start my own business. Unless they get funding, they're not going to be able to do that. They're going to have to find somebody to convince that's a good idea and go do it. But, and for example, when I sold my business, and in the financial world, they don't pay you upfront the money. You have to wait a year, and then they give you a little more than half. And then you wait a year, and you're going to get the other half, and it's in three different increments. And I haven't gotten my third increment yet, and it's a year and 3 months since the sale date. So they put a, if I didn't have that portfolio that was generating that amount of income, I wouldn't have been able to afford to take. I went on 3 trips last year. I wouldn't be able to afford to live my lifestyle without, unless I had that portfolio generating all that money.
So outside of investing, and that's almost a separate conversation, and focusing more on income independence, is there any core messages you would have for young entrepreneurs that are looking to head off on their own now? So you've been doing this for 40 plus years, you're now retired, you had a successful entrepreneurial career. What are some things that you learned early in this process that you'd like to
Well,
share?
I think the entrepreneurs pretty much will know when there's another entrepreneurial thing that strikes them. Hey, I can do that. I can sell this business and make another one just like it over here. So that's one thing. The other thing is for the guys that maybe are middle level managers, middle level executives, and they have this responsibility. I think what got me really to that point where was making 5 times what my salary was. I happened to go to work and I got an appointment in the pension investment department. And in the pension investment department, I was talking to the investment managers of the funds that, different companies were investing in. And I saw the portfolios. Why do you have all this Boeing stock? And it doesn't pay as much as this stock. Why don't you switch from Boeing to this? And she has so much of it. And learning that it was there because Boeing was a big insurance client of the company, and it was all politics, and it wasn't just economics. That's important to my business. But I developed an understanding of the financial world, an understanding of the securities and how to deal with them. And then I figured out how to make a business out of that. So I've said to my grandson, get yourself a job where you're responsible for something, some process that you can turn into a business of your own and make something of yourself. And that's where I think these guys go wrong, is they just spend their whole time kissing up, sucking up to their boss and running his operation than trying to find the unique thing that his business, the business within the business, gives to people, and then making it a separate entity and providing that service.
So
That
piggybacking off of what you've
Yeah,
learned.
learning how to run a business within your employer's business and then making it a business that you run for yourself.
That's an interesting insight. So, if you're working for a corporation and you're considering jumping into the entrepreneurial world, take a look at what the business you're working for right now. What do they do, and what's their sort of unique value proposition in terms of how they're adding value to their stakeholders, to their buyers, et cetera? And is there something you can do to piggyback off of that because you already
And
have experience in that
and
space?
what you can do to improve on it.
Mm-hmm.
What my employer did in the pension investment field never took profits. They never took profits. It seemed to me they never took profits because when I looked at those statements year after year, the price versus the current market value of all these great companies was always a big differential,
Mm-hmm.
positive, and there were very few that were negative. So they were selling their losers and letting their profits run.
Mm-hmm.
And you've all heard that from the financial industry of saying that very thing. And
Yeah.
I'm just the opposite. I take
Inter-
my profits and I make the selection. So a loser to me is one that stops paying me the income that I expect from it. Okay.
Interesting. It's
So
an
that's it.
interesting business model.
Yeah.
All right. So, Steve, I've run out of time with you. This has been a great conversation. I love, there's two really, actually, there were several, several things that you said that really resonated with me. And it's centered around your brand message and how you stuck to your guns on riding the storm in the investment philosophy that you have. And in that vein, really trying to market to an individual that understood the process over the immediate result. And that's how you had your success. And then the other piece I really loved is what you said at the end here is how can you take a look and be self-aware enough to take a look at what's around you, what you're already currently doing if you're looking to start an entrepreneurial business, piggyback off of that and improve it so that you have a unique model that you're trying to sell to people.
Right.
You have this new book out. Please check it out. It's called, sorry, I had the name in front of me, Retirement Money Secrets, and you can get more information. I'm assuming it's on Amazon. Is that right?
It is, yes. It's on all over the place, really.
Yeah, it's on Amazon, wherever you find books, bookstores, but it's also on your website, theincomecoach.net. That's theincomecoach.net. And if you're looking to hire Steve as a personal income independence wealth advisor, this is what he's now doing after 40 plus years in a very successful career. And again, you can find him directly on his website. Any closing thoughts you'd like to share with our audience?
Just after you get off the phone, just take a look at your account statement from your brokerage firm and determine how much actual income you're making and think about how you can improve that.
Now, are you offering guests, if new people wanted to check out your show, they came from me or anyone else, do you offer a service where you'll take a look at their current portfolio or their current investments and give them some analytical advice on it?
Sure. Yeah, it's on the website. I have a thing like that. And if you want to recommend it, I'll say anybody that hears about it in this show, I'll take 25% off.
That's great. Okay, cool. So check him out on his website, which is theincomecoach.net. And he has a portfolio assessment, if you will, to take a look at your income independence model so you can better understand where you are and what he can potentially do if you were to hire him for your services. So, Steve, I appreciate you taking the time to join me today on the Branding Laboratory. All the best in with the sale of your book and your new venture as an entrepreneurial coach. And I'd love to schedule some time if you're interested to have a breakout conversation on this brand model that you're trying to.
I'd be curious to see what you have to say about that. Yeah.
Okay, brilliant. Thank you for listening, everybody. I know you have choices when it comes to podcasts, so I appreciate your time and attention for joining the Branding Laboratory. It's been a great conversation with another fantastic entrepreneur. If you love the show, like it, follow it, share it with somebody else you feel like might get something out of it. And again, please check out Steve on theincomecoach.net. I'm Deevo. This is Steve. Thanks for joining us. Thanks for tuning in to the Branding Laboratory. If you enjoyed today's episode, be sure to subscribe and leave a review. Connect with us on social media for more branding tips and insights. And remember, your story matters. Until next time, keep building and sharing your unique brand story. I'll see you soon.